Hi, everyone. My name is Darin Batchelder. I'm a multifamily syndicator, so I help other people grow their wealth by investing in multifamily properties. Catch me this week on Jesse T Show, and looking forward to it.
Darin, brother, welcome to the show.
Absolutely, Jesse. I appreciate having me on.
Man, it's been a really great connection, man, since we plugged in. Scott Carson plugged us in together. And uh you've hit the ball out of the park, man, with people plugging me into different people in your world and what you do. And I'm very thankful for all that you've brought to the table so far, man.
Well, hey, I appreciate that. It goes right back to you. I'm an older guy, I'm 50, and you're the younger mindset, so you know how to use this technology, and you've been showing me the way of the world as well.
Yeah, so LinkedIn, right? So LinkedIn has been really cool in just terms of plugging into people, especially with 2020 being what it was. In terms of people kind of being hunkered down and really having to pivot. And I was just talking to a gal on the last podcast, and she actually said pivot a couple times in a row. She's like, if I hear that word pivot again, like she's just over it, right? So, but it's funny because
Right.
I just said it. But people have had to pivot and operate almost on an island in a sense. And so LinkedIn and these other platforms that have social media have really come to fruition as a savior for a lot of businesses and people.
Absolutely. I didn't know that world at all until I got involved in the real estate world about 3 years ago. Prior to that, I was on LinkedIn for my other business, but Facebook, I wasn't on Facebook, I wasn't on Instagram, and once I got plugged into the real estate world, and they kind of told me I had to get on Facebook for a private Facebook group, and I saw the value of connecting with people across the country. So it's very powerful. Absolutely.
We'll talk about that in a little bit. I want to give this some context to the listeners and viewers a little bit more about your journey and who you are and what you do now.
I'm sure. So since about 3 years ago, I got involved in the real estate side. I'm a business owner, but 3 years ago, I decided I wanted to invest in real estate. My wife and I went out and bought a new construction duplex, and after that, we felt like it's going to take forever to really build wealth. We want to go bigger. So joined a multifamily mentorship group, met a ton of other syndicators and passive investors in the space. Love the industry, love the people in the industry, and love the wealth building opportunities. So I've kind of, to use your word, pivoted 3 years ago, and have put more and more of my focus on that real estate side of the world.
I love this world that you're in, and for those that are listening and watching, I heard a statistic, and you got to take them with a grain of salt, but most of the world's wealth has been transferred through real estate, whether that's a house that's been passed down. I've experienced that. My family had a house in their name for 70 years, and we owned it outright, and it was just really not special, the house itself, but it was in a very prime location in Boston, and it sold for probably two or three times more than what it's actually worth.
Wow.
So it was very, very
You sold at the right time.
yeah, beautiful time, right? And I was very lucky to have had that experience. And I'm a wealth manager by trade, but I'm a fiduciary. So I talk to my clients and I implore some of them that make sense for it to get into real estate and to do different things. And so, how does that look like for you, even your own personal journey in terms of building wealth? What is syndication? And tell us a little bit more about this avenue of wealth creation and how it works.
Yeah, absolutely. So I came out of the, into the corporate world as a CPA with Price Waterhouse. I then went to work for PepsiCo, both domestic and international audit, then transitioned into software sales, selling to Fortune 1000 companies, and then found myself in a completely different industry on a institutional sales, selling large loan portfolios between banks. And I was working for a large Dutch bank called ABN AMRO, and at the time they were a top 20 worldwide bank. And both selling both residential and multifamily loans. What I just happened to be in the right place at the right time, selling what people wanted to buy. And 2002 to 2006 was there and made really good money. And in that time, my wife was like, well, let's buy the bigger house and, upgrade our lifestyle. And I was like, you know what? I just kept socking money away and was like, at some point, this is going to end, and when it does, I don't ever want to work for somebody again. So, I spent the time building a business, and what I did right was, I planned for it. And then I actually took action and got into the business and grew that business over the years from 2007 and onward, and I still have that business. It gave me the flexibility of my time. So as my son and daughter were growing up, I was able to go to all their sporting events, without having to answer to anybody. So that was the good thing. But as Jesse mentioned earlier, real estate just has this wealth building power. And so 3 years ago, I decided to get into the real estate world, and I just started networking with other people that shared with me, like, look, my net worth was 500,000, now it's 5 million. It's just incredible because of the tax efficiency related to real estate and the leverage. So those two components, make a huge difference. So prior to that, I was in the corporate world, and then I was a business owner, and I grew up with the mindset, just put 10, 20% of your money aside into investments, put it into the stock market, and it will just grow over time into this huge nest egg. And it did grow, but it didn't grow to the area where I thought it was going to grow. So when I started networking with all these other real estate professionals, I realized that, real estate just has something that other investments don't. And it gives you the ability to really supercharge your wealth building.
How did you make the leap from accountant slash CPA to sales? I feel like those two things don't necessarily go hand in hand. That's something coming from a sales guy that's now a wealth
Right.
manager. I kind of went in reverse. I did the sales first,
Yeah.
and then now I'm doing the technical stuff. But you went from CPA accountant, which generally don't have the I guess they're not known for being like the most exuberant, outgoing salespeople. If you were to stereotype, how did you make that leap from that position to sales?
It's a great question. It's a great question. And, I think that I'll answer it by saying, for the listeners, whatever you want to do in life, try to find a mentor, try to find other people. It could be a paid mentorship, or it could be other people that have just done what you want to do. Network with them and find out how they did it, and then just repeat that. So going way back, going into college, I really didn't have a mentor, and so I was trying to figure out, what do I major in? And I was kind of torn. I knew I wanted to do business, but I was kind of torn between accounting and finance. And my thought process at the time was, look, if I do accounting, I could always go into finance, but if I do finance, I can't go into accounting. So I chose accounting. I don't know that that was the best decision for me. And had I had a mentor, I think I probably would have went a different route. But so then I become a senior. I start interviewing. I get a job with Price Waterhouse. It's a prestigious company, and get my CPA. But I never really loved the work. I never really loved what I was doing. And then I went to work for PepsiCo. And again, I got to travel the world on Pepsi's dime, but I still didn't love the work. So I wanted to have a direct impact on the bottom line. And when I went to Pepsi, I got into, the audit world. They had kind of couched it as, hey, this is a training program, and then you'll roll into a business unit. And, I was like, well, look, when my time came up at the end of the 2 years, I wanted to roll into sales. And it was tough for them to position, an accounting guy, an audit guy that wants to be a salesperson. So a lot of the business units really didn't have interest.
Yep.
And so I was like, well, look, I'm going to go off on my own then. So I actually left. I was doing a month in a country, a week home, month in a country, week home. I tried to interview in that week I was home. And then finally I was like, you know what? This is not going to be my life. I quit. And, I wasn't sure what I was going to do next. I knew I wanted to go into sales. I went and lived with a buddy, and I started sending out my resumes. And, I ended up getting a position selling accounting and financial software to Fortune 1000 companies.
What was the company that was selling that software?
Computer Associates.
Okay. So you were in the same kind of field, so to speak, with the accounting in the background. So you could kind of probably speak to more of the technical stuff, but the art of the sale and the positioning and the prospecting and
all that was new.
All the relationship building. And how did that come across for you? Was that a steep learning curve, or did you kind of hit the ground running? How was that for you?
I mean, it was all new. But thankfully I had a really fantastic sales manager. And so
that can make or break you for sure.
Right. Yeah. So he was amazing. He took me under his wing. He taught me a lot, and I've always been persistent and driven and have a positive mindset to, not, what will I be successful, but what do I have to do to be successful? So, and learn from other salespeople. I just did, kicked, fought and scratched my way to figure it out.
Kick, claw, and scream. That's what we used to talk about back in the day. I was in an outside sales company for my first sales gig right after the military. So probably about 25, maybe 26. So I was still PhD, poor, hungry, determined, man. And just
exactly.
Yeah.
Just get after it.
It was fun. It was outside sales, door to door, cold call, commission. We were doing stuff almost like Groupon, but like for the Atlanta Braves or the Hawks or the Thrashers when they used to be here. Local oil change. My first campaign I worked on, which was like the product or service we were marketing and selling, was a 3-day, 2-night getaway to Hilton Head Island. And it was through like Spinnaker Resort. So there was like a timeshare they had to go. And like, we had to sell people on the idea of the timeshare, which wasn't super sexy in terms of like, you have to go spend 90 minutes, but like, we were like, you get a tour of the property and like all this stuff. Like we kind of sold it, man. And that changed my whole career. Being able to go out and talk to a brand new stranger, build some impulse, build excitement about this thing within a 5 or 10 minute exchange at most. And doing that 80 to 100 times a day, every single day, again and again and again. It was like throw me out to the wolves. You come back like the leader of the pack, so to speak. It was incredible.
Yeah. That's awesome. It's great experience.
I would never trade it for the world. I always tell my friends and like people that I do business with that it was like Navy SEALs training for sales. Like it completely taught me everything that I know today and put me on this trajectory. So you get into the sales role. How long were you doing that for? Were you doing it for some time?
Yeah. So I was in their Manhattan office and, a few years in Manhattan. And then, my mom, my brother had moved to South Florida. The rep that covered kind of the Southeast left and I took over that territory. So I transferred out of Manhattan and went down to South Florida and I was with Computer Associates for a while. And then, the .com craze came around and I went and jumped ship and went to work for a .com based out of Boston, called ecredit.com, stayed in that kind of financial space. And, was in that software world for a while until, the tech bubble burst. Yep. And that's kind of when I made the jump over into institutional loan trading.
So it's interesting how your journey's kind of paralleled some of these market corrections that were in your specific market. So it's with the tech bubble and what you were doing for a living, you experienced that. And then you get into real estate, right around 2006 is when you said? So
2002 is when I went into the institutional loan trading, but yep. I was still a corporate guy. I was on a trading desk and I was a commissioned salesperson. From 2002 to 2006, and then 2007 started my own company,
which is a year before the real estate bubble.
Yeah, it's funny. It's funny because if you ask almost anybody when was the Great Recession, they say 2008, 2009. But I was in that world. I was trading these loans and I was seeing what was happening.
Yep.
And in 2006, I told my wife, I said, this is going to end badly and, let's sell the house and move into an apartment. And
did you really say that?
Yes, absolutely.
Did you do it?
I did not do it because she said, look, Darin, how long do we have to live in an apartment? And I said, I don't know. I don't know if it's a year or if it's 5 years. I don't know when this thing is going to end, but I just have a really strong feeling it's going to end badly.
They were selling crap loans to everyone.
Yeah. So, she said, well, we have 2 young kids, like we had like a maybe a 2-year-old and a 4-year-old. And she's like, I don't want to live in an apartment for 5 years. And so, I said, I get it. So we didn't sell, but had we sold, we would have made a lot more money on that house for sure.
Yeah, because then you're in the war of attrition at that point. Afterwards, you're holding on until the market comes back.
Yeah. So, we bought the house, I think in Florida for like 370. It went up to, when I was talking to my wife, it had gone up to like 770 value wise. And we did not sell. And when we ended up moving to Texas and we sold the house, we sold it for 430.
Oh my goodness. So you kind of look back and you're like, man, it could have been $400,000, but it served its purpose.
Yeah. But it's hard when you're, it's a family and it's your home. And so those factors come into play too. It's not just a purely an investment. So
no, it's your primary residence, and it's where you're building your memories and your family. And so you're getting into real estate at this point during one of the toughest times in history in terms of the economy, but specifically for real estate. Have you seen the movie The Big Short?
Yeah. Very good movie. I read the book too. Yeah.
Great movie. And it was interesting at the end of the movie, they were talking about how banks are starting to kind of do the same thing again.
Yeah. And I look back on that and I was like, I had made the call with my wife about selling the home, and I had called somebody about, how do I short the market? And they started to tell me, but I just didn't follow through on that. And I wish I had, because I did have a very strong feeling about that. But, the thing that I did good afterwards was I started a company, but I didn't actually so I was a business owner, which gave me the flexibility in my time, but, I still had to pay, large, tax bills, on the profits of that business. And when I got involved in the real estate world, actually buying investment real estate about 3 years ago, I started to see the huge impact of depreciation and, the tax loss associated with that. And, all of a sudden talking to other people on how they were able to build their wealth because they weren't having to write these large checks to the government every year. They were either doing a 1031 exchange and rolling into a bigger property, or they were using other, avenues to shield that through depreciation and, all legal ways. And actually it's funny because one of the guys that I met through the group, he told me, he said, "Hey, Darin, have you ever read this book, Tax-Free Wealth by Tom Wheelwright?" And I said, "No." He said, you got to read this book. And I don't know if it was the first paragraph or the first chapter or what, but at one point in the book, it says, there's a lot of people that feel like it's their patriotic duty to pay their fair share of taxes. And I was like, that's me. Like I made really good money and I was paying very large, checks to the government for income taxes. But I felt like, look, we need roads, we need police stations, we need, infrastructure. And, God has blessed me that I'm able to write this large check. And so, but then, the book went on to say, well, look, the tax code is like 3,000 pages. The first 5 pages, hey, if you make this much money as a W-2 employee, here's how much money you pay in tax. The other 2,000 pages are, hey, if you invest in this area of the economy, the government wants you to invest in that area of the economy, so they'll provide incentives to do so. So why don't you try to learn what the government wants you to invest in and take advantage of those incentives? And I was like, holy cow, that makes sense. And, real estate was one of the areas that, he highlights in that book.
Just a mindset switch and just being able to say, I'm still doing my civic duty as a citizen to kind of do my part, but I'm going to do it differently. And this is a conversation I have for a living with building wealth, or most importantly, with clients that want to keep or expand their wealth, is tax strategy in terms of how do they keep more of their money now pay less in taxes, and do it legally. And there's all these different incentives and essentially legal loopholes. There's all these different things that you can utilize. And you being a trained CPA/accountant, I'm sure that probably played into your efficiency and your effectiveness with understanding these types of things. And this is how the wealthy stay wealthy. And this is how wealth is created is, letting your money work for you, stop trading time for money, and pay, legally the least amount of taxes that you can.
All fantastic points. All fantastic points. And you know what? Yes, I was a CPA, and yes, I was in that world, but I was still groomed to be a corporate guy. And like, I read the Wall Street, I read all the financial mags, but nowhere did I ever read about, syndication and, private placement, how to get involved with them. And yeah, once you get involved, it's like a little world. And, I'm not in the angel investing world, but that's another little world, that people that are wealthy are in this little, kind of bubble where they get exposed to private companies that they can invest in, well before the public ever finds out about them. So it's amazing. And also like you said, the mindset shift, it's not about, I guess it is a little bit about tax avoidance, but what the government wants you to invest in those areas for particular reasons. Like in the area that we're investing in, we're buying larger multifamily communities and then, providing value by either upgrading the exterior or the interior or both, and providing a nicer community for, the tenants. And, if private citizens like us don't do that, these communities will start to, won't be as nice for these people to live in.
Yep.
And it provides the ability to continue to provide, low cost housing to the workforce.
It's a cycle of the economy at its like deepest roots, where you want people to aspire to live in a nicer place so they can go to nicer schools or have certain jobs and kind of bring money back into those specific areas to try to revitalize, gentrify, whatever you got to do. It just basically helps everybody in that small pocket of town, so to speak. But I want to hear more about the transition into your first syndication deal. So you kind of did. There's this mindset of people as they're growing up in certain stages of life where it's like, if I can just get that first rental property and rent it out, to a family, or maybe I can get a duplex like you did and maybe have two families. Or if you're from Boston, you get really lucky and you can get a 3-decker where you have 3 families in there. Like, you're not going to get rich on those things. Those things that produce a couple $100 a month, if you're lucky, maybe a little bit more, come with lots of hassles, lots of headaches, all these different things. And so people have to start getting outside of that smaller thinking and think big, literally think bigger.
Yeah.
What was that first kind of aha transaction, or even, let's even talk about how you got into syndication in the first place and maybe the first deal that you did?
Sure. Mindset is huge, so surrounding myself with a bunch of other people that had done it really is what changed my mindset. So I thought I was going to have to do duplex, 4-plex, 8-plex, and, take years to kind of build up. And then all of a sudden I was in a room with all these people that had, purchased 100+ unit properties, 200+ unit properties, 500+ unit properties. And I'm like, holy cow, how did they do this? And the other thing is you can't help but look around the room and size people up. Like, they were just people, they were not, something that you're not. Like, everybody has the opportunity to do it. So all of a sudden I looked and I was like, these are just people. Like, if they can do it, I can do it. I just have to figure out what are the steps they went through to make it happen. And so that's when the light bulb went on. And then I started going after deals.
Give people a little context on what it actually means, syndication, real estate syndication.
So syndication, I think, is a word that is intimidating to a lot of people. I didn't know what it was. You kind of think it's for other people. It's like this, little sliver of people that understand what that is. All it means is we're a group of people are coming together putting all our money together so that we could buy a larger asset than we could buy on our own.
Yep.
It's really that simple, but that word is very intimidating to a lot of people, and, think like, oh, that's something that's for other people. That's for institutions, that's for the elite, but it's not. It's just a bunch of people putting money in together. And then people keep doing it because once they see the returns, and the tax efficiency and the wealth building, then they want to keep putting more of their funds into those types of assets.
What are the barriers to entry to get into syndication in terms of, cost, some of the lowest costs you've seen to get in part of some of these deals, time commitments, like some of the things you have to be prepared for when people start looking at syndication?
Yeah, good question. So I would divide that up into two different camps. So there's, people that want to invest passively. So they don't actually want to go find the deal. They don't want to run and manage the deal. They just want to, pull some of their money out of the stock market and diversify and put some into real estate and let somebody else manage it. Passive investing. And then the other one would be active investing, actually being the one to actually go out and find the deal and manage the deal. So when I got involved in the multifamily mentorship group, that was December of 2017. Starting in January of 2018, I started looking for deals, but I also pulled a bunch of money out of the stock market and started to invest with other syndicators. So I was a passive investor first, and I invested, I think, in like 7 deals in that year. And the initial investment,
your initial investment.
Yeah. So the initial investment for most passive deals is $50,000. There's some of the larger deals have minimums of 75,000 or 100,000. Some of the smaller deals you can maybe get in for 25,000. But most deals, the minimum is like 50,000. And for me, I invested anywhere from 50,000 to 100,000 in each of those deals.
So you take 50 grand, you're a part of this group, you're getting ongoing education, you're learning. This is just kind of in general. So like ideally, are we looking at a return of like 8 to 12% per year? And is it broken up quarterly? Like how does it work for the investor and like what they could potentially expect if we looked at history, kind of like the stock market? The stock market's produced X over X amount of time. How does it work in that world?
Sure. So returns today are kind of in that probably total returns, probably in that 12 to 15% range, 12 to 14% range, total return. And it's broken out into 2 different components. So a cash on cash return, which would include the distributions made each year, and then a back end capital gain when the property is either sold or there's a cash out refinance. So most deals are built on a 5-year business plan. So just to simplify it, if somebody put in 100,000 and let's say the total return was forecast to be 70 to 80%. So let's say 70%. Okay. 7% cash on cash. So for 5 years, the individual that invested that 100,000 is paid 7,000 a year. So they've gotten 35,000 back. And then it's forecasted that they receive a $35,000 capital gain when the property is sold. That's where that 70% total return is. So they'd get their 100,000 back after that 5 years plus another 35. They've been paid 35 over the 5 years. So now they've invested 100 and they come back with 170. So that's kind of the averages per se. But, this is real estate. It's not a written contract, and it's based off of the actual performance of the property. So, the distributions typically, every deal is different, but, a lot of deals, you may not get your first distribution until after the first quarter or after the second quarter. And then some deals you're paid, distributions quarterly. Some deals you're paid every month. It depends on the deal. But there could be times where maybe the first year you paid out your 7% distribution, and then all of a sudden in year 2, COVID happens.
Yep.
And I'll say some properties are still doing very well, and some properties are hit a little harder with COVID. So maybe cash flow is impacted, and the sponsor is like, look, we need to, maintain cash. So we're not going to pay out distributions right now, or we're going to cut distributions to 3% or 4%. So those are things that, you have to think about. Really, these types of deals are geared for, funds that you can invest and kind of just forget about. And then, it's very difficult to get your money out of these deals. So you have to put it has to be funds that you don't need to access in the short to medium term.
So the question becomes, for someone who wants to invest in these types of deals, specifically if history has taught us about these returns and this, the illustration you gave us of 100 grand, 35 grand in terms of like $7,000 a year for 5 years and then 35 at the end of it. If COVID comes along and, they decide, hey, we're going to bump this down to 3%, do they make it up somewhere else in the back end? Or do they just say, you're not getting your full like percentage this year?
So the lead sponsors, whoever's put the deal together is evaluating every year, what are my options? What's the market giving me? And so, are interest rates super low? Should I, refinance and pull cash out and send, a percentage of the capital back to investors? Is it, a huge seller's market? And, instead of getting out in 5 years, I can get out in 3 years and get my investors, maybe not the total return, but, close to it, or, and on an annual basis, it's still a very attractive return. Those are, areas that the general partners are looking at every year. So, it's a relationship business. And if you invest with a sponsor and they provide you with a very good return, then you're more apt to want to invest in more deals.
Work with them again.
So if they come back and they, give you a very low return, you're probably not going to invest with them back again. Or, maybe you give it another try, but you're not going to go and tell your mom and dad and aunt and uncle, but when all of a sudden you get this fantastic return, that's when you're like, hey, mom, dad, aunt, uncle, brother, sister,
share the wealth,
hey,
literally.
Hey, I just did this thing and it worked. You may want to consider investing too.
So your first year, you got into the passive side initially, but you're also learning the active side too. And I think you said you did 7 deals that first year.
I did. And then I was awarded my first lead sponsorship deal after 9 months. And then it took us a few months to close it. So we call it a year, soup to nuts, to land and close the first syndication deal as a sponsor.
Okay. And how does that change the game? So what changes in the dynamic there?
So when you're a limited partner, you're getting returns for investing your money. Okay. When you're a general partner, you're getting returns, the same returns for the money that you invest in the deal, but then you're also getting a boost. You're getting a percentage of the deal for putting the deal together.
Yep.
Okay. So that's where, there's a bigger opportunity to make more money. As
like a finder's fee, so to speak.
It's, I don't know, you can call it whatever, you want. It's not really a finder's fee per se. I mean, you still, the work for the sponsor isn't done when they close the deal.
Okay.
They're responsible for picking the property management company, watching the property management company, overseeing the rehab on the property, making sure the business plan is running us. And then if it's not, then how do you, you're a business owner, basically, like how you're the lead. So how do you pivot and how do you make sure that you, maximize the performance of that property for you and all the investors in the deal?
It's a lot to learn in 1 year.
Yeah.
And so you felt like the first 7 deals for that first 12 months, did they all go pretty decently for you?
So, they're 5-year business plans. So 2018, none of them have gone full cycle yet.
Yep.
Having said that, the first exit strategy is coming to fruition now. One deal that I got into, it was a 2-property deal, and I invested 75,000 in that deal. They refinanced both of those properties in December, and then I haven't gotten it yet, but I'm due to get it at the end of January. Um, Based on the cash out refi, I'll probably get back like, I don't know, 15 to 20 grand of my initial capital. And then the agencies now are holding some reserves because of COVID. So another piece of it will be held in 9 to 12 months from now. We'll get another piece of it. I think between those two pieces, it'll be 35 to 40% of the initial capital will have been returned. And then we still all own the same percentage in that property and continue to receive the cash flow.
So I'm walking through this like I'm an investor, and people that are listening and watching would probably have some of these questions. So I used to work in a bank for years on the retail side, and they offer things like CDs, which are just awful, certificates of deposit, where you take X amount of money and you leave it in for 6 months to 5 years. And when I was in banking, if you got anywhere between a 2 and a 2.5% return on your money, that was pretty decent in terms of banking. Now it's like way less. So it's a really awful way to generate revenue, and you're just parking money, and it's just accruing so slowly. But from what you're saying in the illustrations you gave us is, in this normal process, you put 100K in. After 5 years, you get the 100K back. But along the way, you've made $7,000 a year for the 5 years plus. And, when they sell the property or something comes up, you can make another 35, totaling 170. So you've made 70,000 on this transaction, plus you got your principal back. Why aren't more people doing this?
I didn't even know about it until I went looking. Until I went looking and got involved in the multifamily mentorship group. Like I said, I've read the Wall Street Journal for years and years and years and years and years, and I don't know why it's not publicized. I've been a part of a number of different, fantastic golf clubs and been around a lot of wealthy people, and not one person had offered me an opportunity to invest in a deal like this. So, you have to go searching for it. And once you do go searching for it and you get into that little small world, like now I get opportunities emailed to me, left and right to invest in different deals.
Now you're turning stuff down.
Yeah. Oh, absolutely. I get so many deals. I can't invest in all of them, but prior to that getting involved, I wasn't, involved in any, because it's a private placement. So you have to be on, the email list of different people that are doing this, different sponsors, different syndicators.
There's a whole, I learned about this in my study from our Series 65, and there's a whole rule when it comes to marketing and how they offer this to a certain amount of people, and they can only go about it a certain way, and it is kind of discreet in a sense.
Yeah, there's really two SEC exemptions. One you actually can market, but you can only accept what's called accredited investors.
Yes.
So people that have a net worth of $1 million or greater, or their income as husband and wife is 300,000 or greater, for the past 2 years, with the likelihood that it'll be $300,000 or more in the existing period. You can market to, on social media and other if you want to accept only accredited investors. The other exemption allows you to accept as many accredited investors as you want, and then up to 35 non-accredited, but they're called sophisticated investors, which is a little bit more of a gray area, but basically it's, investors that, are sophisticated enough that they can make a financial decision whether this is a suitable investment for themselves.
Yep. Yeah. A lot of regulation.
Right.
A lot of hand holding from the SEC telling you what you can and can't do.
And, I understand that the SEC is trying to prevent, people from, bad actors from going out and, taking, grandma's last, 50,000 or 100,000 and putting it into a risky investment. So I get that. On the flip side, I think there's a lot of people that, are not awarded the opportunity and don't even know that they have the opportunity because these laws are in place.
For sure. Yep. No, I see it all the time. And I think it's just a matter of communication like anything else. And so like, how did you first hear about this? Did someone say something to you? Did you hear about someone that was just crushing it? And you're like, hey, what are you doing? Like, how did you learn about syndication?
It was just, I went looking for the opportunity. So I bought the duplex, and then I was like, there's got to be a way to go bigger.
Yep.
There's got to be a way. I don't know what that way is, and I don't know anybody that's doing it, but there's got to be a way. So I started to look up different real estate meetup groups and started to go to them and just ask questions.
Yep.
And the first few I went to were more, single family fix and flip type groups, and I wasn't interested in that. And then all of a sudden I happened to, attend one. I remember it was a meetup group on a Saturday afternoon. There was probably only 15 or 20 people there. And I happened to meet this couple that were like, hey, Darin, I was in your, same position. We, business owners, we, had built up, retirement reserves, but not to the point where we wanted to. And we knew we wanted to try to get into multifamily, but didn't know how. We joined this group, and then they were very open about how much money they made. They were like, on the first deal, we made this. On the second deal, we made this. Third deal. And I was like, holy cow, if they can do that, if they can do it, I can do it. And so I was like, sign me up.
So now you're, almost 3 years into this side of the business. What are some of the challenges or some of the things that you're excited about, as you're coming into 2021?
Yeah. So the excitement is after I closed the deal and kind of managed the deal for a while, I started thinking about myself, like, what do I like about the business? And, the big thing that got me charged up is kind of what we've been talking about, is that, how do you get the word out to more people and let people know that they have this opportunity? So that has been really the driving force for me. The other thing was that, in our deal, I partnered with a guy who had a lot of experience. Okay. So that's one thing that, you need to do if you want to go into this big space. You have to partner with somebody with experience. And his name is Raj Gupta out of Chicago. Very good guy. But we had 44 limited partners in the deal. So what I realized after the fact was, this is phenomenal, because, I'm 50, and like, you always hear about, how you're going to give back. And I don't know why, but I just don't have a lot of enthusiasm for going in, I don't know, cutting people's bushes or something, so like this gave me an opportunity where I'm like, my other business, all the profit comes to, my family. But these syndication deals, look, as myself and my partner help grow the value of that property and we sell it for a profit, we're not only benefiting from it, but we're helping grow the wealth of 44 other limited partners and their families. And so that's what got me excited. So I started a podcast, and that's the part of the business that I think I really enjoy, is trying to get the word out and involve more people. And then second side of it is just inspiration. Like, look, there's a lot of people in this world that are unhappy. And I was there, man. I was in the corporate world, and it actually ate me up inside. Like it hurt me. And I know that a lot of people are in that position, but they let fear stop them from taking the next step. Whether that's starting a business or investing in real estate, or investing as a passive, or whatever, you really want to do, but you're afraid to take that chance. Like if I can help anybody take that step, that to me, I don't care if I get any financial benefit from it. That's just part of life, like giving back.
That's part of what's becoming like your life's work and your life's mission. Maybe your ethos is the things that you faced and overcome, and that you went searching for and seeking for, and then you started getting this confidence. You started getting, some real business acumen on this new endeavor, and now you want to be able to kind of give that back. And I think that's beautiful. I mean, that's part of life, right? If you can't transfer assets, real estate, funds, you can transfer knowledge, and you can impart your life experience. And our story is for other people. And I think that's beautiful. And you've kind of innately gone into that with doing the podcast. How's that been for you? When did you start the podcast?
Mid 2020.
Okay.
So yeah, I was going after a deal in February, and it was about an hour south of Dallas, and I thought I was going to win the deal. And when you go after these deals as a sponsor, you spend a lot of time and effort, and I thought we were going to win that deal. And then when I lost it, I kind of looked up to the big man upstairs, and we came up runner up, and it's like, what next? Do I go after the next deal or what? And I had on my goals to start a podcast, but I was going to do it later in the year. And all of a sudden he kind of just put in my mind, like, podcast conference. I looked on my phone. There was one in Orlando the next week. I bought a ticket. I went down, knew nobody, didn't know anything about podcasting.
Was it Podfest?
It was Podfest in Orlando. Yes.
I was supposed to be there as an attendee. We could have rubbed shoulders or elbows back then.
Yeah, that'd be funny. So I met 0 people from the real estate world.
Yep.
I met all these other podcasters and just asked them all kinds of questions. And, starting with, what kind of microphone, what are all the technical things, and then how do you do it? And then I met a consultant there, that, I liked what he had to say. He was leading one of the breakout sessions, and I, went up to him afterwards, and I ended up hiring him as a consultant to help me launch the podcast and also launch my website. And he's been instrumental. And I think that, I see a ton of value in hiring people, that, have done it before. And there's a lot of people, and, to your listeners, there's a lot of people that will tell you, like, conferences are a waste of time, or what are you doing, or why you invest in that? And, I couldn't disagree more. I mean, look, yeah, you're investing in yourself, and the people that are surrounding you, your friends and family, they don't have will intent. They're not trying to hurt you by saying that, but, they haven't done it. And so they're thinking that all these people are scamming you, by having you come to a conference or buying their book or listening to a podcast, whatever. But it's not true. I mean, people are trying to impart wisdom, and that wisdom, one, can make you a lot of money, but secondly, it can reduce your risk. And third, it can shrink the time frame dramatically from how you go from A to B. So I could have probably figured out how to syndicate a deal and maybe got a deal done, but I firmly believe it probably would have taken me 2, 3, 4 years to do it instead of it taking me a year.
Listen, you said it beautifully, and I won't even add any color to that. But with the hiring consultants or mentors, I'm a consultant and a mentor, but I have people that I seek information from and mentors, and it's just that learning curve, and they've already screwed up. They've already gone through the bumps and bruises, so they can educate you on how not to, or at least speed up your learning curve and do it more efficiently. And that's a lot of what I do for my clients. Is a lot of times they hire me because they want to make money, but a lot of times I show them how not to lose money, right? And how to keep more of their money, which they weren't even thinking of in the first place. And so it's beautiful going to these conferences. I've met to this day, some of my best friends at different conferences. And once you get really clever and figure out how to go to a conference, it's not always about the people that are on stage. It's always about the people that are around you, that are in the audience, and the people that you can connect with, and these people that you plugged into. And for me, I got a little clever one of the times in my life that I got clever. And I got clever about Tony Robbins. And Tony Robbins, yeah, he's exciting, he's motivating and all this stuff, but he has a couple of books out there about money. And one of them is called Money Master the Game. And in the book, it specifically says, for the whole book, the narrative is only work with a fiduciary. Someone who's not going to sell you a product or service or make a commission. Someone who's going to be in total alignment with you and only wins when you win. And it just so happens that I'm a fiduciary. So what do I do when I go to Tony Robbins? I listen, I hang out with the people in the crowd. And then by the time that they're done telling me what they do, and I'm just like enjoying them because I love to learn and listen, they're like, oh, well, tell me what you do. Well, Tony wrote this book about me. Like, I joke with them and they're like, what do you mean? And so we go this. And so now I find friends and clients because I show up at these events. It's friggin' insane. So I absolutely agree.
That's
Investing in yourself is the best investment you'll ever make, because then you can do life well, but you can also pour into other people and then be impacted by other people as well.
Yeah, absolutely. So, I mean, we all have a story and we all have different experiences, and there's people that want to learn from you. And like, I was at a Christmas holiday party in that multifamily mentorship group just about a month back. And, I had my wife there, and this guy comes up and he's like, oh, I gotta tell you a story about Darin. Like, and I'm kind of like worried, like, I'm like, what is he gonna say? My wife's right here. Like, and I didn't know what he was gonna say. He said, Darin sat next to me in, this first weekend event that I came to, and I wasn't part of the group. And he really shared his experience and convinced me to join the group. And since then, I've partnered with these other 3 people. We've bought, 2 deals, and those deals have appreciated in value by several $1 million. And I didn't know what he was going to say. Right. But 3 years ago, I knew nothing about the space. I got educated and got a little bit of experience. And then I was able to help the next guy.
Yep.
And now he's going to help the next guy after that, and so it just has this pay it forward, mentality to it.
It plays into legacy too. You're leaving a piece of yourself for the next person, and so on and so on and so on. And I think that's really kind of one of the secrets and the beauties to life is how you do life well with people. And it's sharing those journeys and those learnings and those teachings and being a student so that you can lead and teach when you're called to. So the podcast has been going on for a few months, and I know you've already cracked out a ton of episodes. I've seen the list of people. You've introduced me to a few of them, and they're incredible. What are some of the takeaways and some of the learnings and some of the benefits you've personally received from being a podcast host?
Relationships is one. It's given me a reason to reach out to a lot of people that I normally wouldn't have reached out to. So I get to meet these people, and develop relationships with them, and also learn from them, so a lot of, I've been thinking back, I think we're on episode 30 something, and I've had a lot of syndicators that have 300, 400, 500 or 3,000 multifamily units under their belt, and, just a ton of experience. And I've heard this common theme with a lot of them. When I ask, like, how do you push past the fear and actually do the deal? Not all of them, but I would say the majority of them have answered it the same way. They've said, I think about what's the worst thing that could happen to me?
Yep.
What's the worst thing that could happen to me if I do this deal? And then when they think about it, they're like, you know what? I could live with that. If everything goes wrong, and that's the position I'm in, I could live with that. And then they think about what's the upside.
Yep.
And the upside is way better, and has a much higher probability than the worst case scenario. So that helps them pull the trigger and move on.
Are you familiar with Tim Ferriss at all?
Yes.
Yeah. Tim Ferriss has a very similar mantra mindset. He's a human guinea pig. He tries a bunch of different stuff. He's a hyper, quick learner when it comes to new endeavors. And he always had that framing as well of what's the worst thing that's going to happen when I try this? Am I going to be dead? Like, that's like or am I going to hurt someone else? Like, that's the baseline. And then you go up from there, and then you go, well, what's the best thing that can happen? And I think whittling it down, even if you land somewhere in the middle, it's probably a lot better off than what the fear was telling you that you may experience, so to speak. I think it's beautiful that you have that mentality, that you're learning from your guests. You're doing life. You're having these relationships. You're getting into business endeavors. It does give you a beautiful way to connect with people. So for me, I am very regulated through FINRA and SEC with what I do. And for marketing, from my standpoint, as a fiduciary, I've taken that step to become a fiduciary. They don't want us having like testimonials and things like this because it could sway people's decisions, when for most businesses, a testimonial is gold. So I had to figure out a way to get around it. And when I started doing the podcast a couple of years ago, well, about 2.5 years ago now, it was just this beautiful way to sidestep that whole thing, because I'm not talking about financial planning. I'm not talking about specific, recommendations. I'm having conversations with badass people like you and your journey and your story. And it's just done so much for relationships and for business and for enriching my life personally. So I love hearing other people's experiences with their podcasting journey.
Yeah. I'm very thankful. And I've talked to people and I say, you know what, when I think, 3, 4, 5 years down the road, what's that going to look like? And I try to look at two different paths. Okay. Had I won that deal in February, it was a 210 unit deal, or the podcast. Okay. 3, 4, 5 years down the road, which do I think is going to have brought me more value? And I thank the man upstairs for, pushing me in this direction, because I think the podcast is going to provide me way more value, from the relationship standpoint, from the learning standpoint, from the growth standpoint, and than just having one other deal.
Hell yes, brother. I love the way that you're doing business, the way that you're doing life. You seem to be happy, which is really important. It seems to be serving you and the way that you want to operate in the world. And I'm looking forward to seeing more come out of your business, your podcast. And I have a couple questions for you for myself. I might look into syndication for my own personal portfolio. So we'll chat about that. But thank you so much for all that you do. I'm pumped about our friendship and where we're going. And I'm looking forward to the future. So he's the mighty, the powerful, the amazing Darin Batchelder. I'm Jesse T. Be sure to catch us on next week's episode of the Jesse T Show.